Yeah, exactly. All right, well, we're going to get to the big number, and it's not all the money that Kathy Wood wasted. It's 75, ladies and gentlemen, and that's how many basis points the Fed increased interest rates yesterday, in line with consensus estimates. Now, this marks the highest level for interest rates since January of 2008. In a statement, the FOMC said the committee anticipates that ongoing increases in the target range will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. Garrett, what are your thoughts on this Fed move? Was there anything from the meeting or the post-rate hike press conference that surprised you, aside from all that hand raising?
Well, that's going to take 5 years to get back to 2% if they were going to do that. But the key line that I had is it's premature to discuss pausing. I want to reiterate our stance to continue a tightening policy. The other statement was that, yes, they may have a smaller rate hike in December, but it did kind of insinuate that they may have more smaller rates. And that drove the fund rates, the terminal rate higher. The hand raising was weird. I was a little intrigued by that. The fact that people are raising hand, you would think they would have some orchestrated system in place, but it allows the guy with the microphone to choose who's going to give the softball question. Again, this wasn't a surprise. As I said yesterday, coming in, watch the 235 move and then see where the market moves at 237. We had a weird pop at 235. That was the top tick. And then at 237, this thing just rolled right over. And it's still going. It went right past the 415 period, and now we're down this morning, and it's taken everything with it, energy included.
Yeah, no, this is nasty. I mean, we made a volume profile breakdown yesterday at the close, and I'm seeing in the Qs we'll get to about 261.29. Apple also breaking its key support. But sticking with the Fed, we'll get into that in a little bit. Look, they also said that future rate hikes will take into account, and I'm quoting this, the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and economic and financial developments. Garrett, all these fancy words, does it mean the central bank is becoming self-aware?
It doesn't mean anything. Like that whole sentence, is so vague and so full of just, they said monetary twice, they said economic twice, they said activity multiple times. None of this stuff matters. I mean, again, this is all gobbledygook. The key thing here, again, is that the Fed is fighting inflation on its own. We have never brought inflation down unless we bring that CPI number above our Fed funds rate. So again, I keep stressing this. We're probably going to 5.5%, possibly 6%. Might not be long, but it is an effort to contain inflation. We'll see how the election impacts inflation outlooks, but also tomorrow, key day tomorrow, jobs report, and based on yesterday's ADP report, 7.7% increase in wages. That's not going to be something that the Fed wants to continue to see. The Fed does not really want to see the market rallying, but it doesn't want to blow the market up at the same time. So I would anticipate more tough love in the future.
I love when a smart person says gobbledygook. There's no other word to explain it at this point. Sean, maybe you can.
I don't think I've ever said that before.
I don't think so either. I mean, there's no other way to put it. Sean, we're going to bring you in here. Garrett's calling Powell's remarks gobbledygook. What's your reaction?
I thought he was trying to message the fact that everybody is talking about, is the Fed aware of the lag effect? And he basically said, yes, people, we're aware of everything. And he had to use lag effect because he wanted everyone to understand, yes, we see everything. We see what the market's doing. We understand lag. We understand everything. And the markets took that as, pivot? Is that, he sees the lag, therefore they're going to slow down and let the lag catch up and see what actually impacts economic activity? No, he was just acknowledging, yes, people, we're all perspicacious. We see everything. And that's all it was to me. I didn't understand the market's reaction in the first place. Certainly understood it after the fact. It made sense to me that the market tanked. I thought it was going to. I didn't think there was any chance in hell, a snowball's chance in hell, that he was going to be anything but hawkish, which is what he was. So that's the direction for the market right now. It's going to continue to be down because rates are going to continue to go up. You look at the 10-year now, banging through the roof. 2-year, by the way, you want to start picking up the 2-year, which I think it could go to 5%.
All right, so do you think they'll actually reach their 2% targeted inflation rate anytime soon, or does the economy have to break first?
I think it'll probably be in maybe like January because it'll going to be a cold day in hell when they get to 2%. I'm with Garrett. I don't know about 5 years out, but I think I'm between 1 to 2 years, depending on how high they raise rates and how long they keep them there. Looking at past recessions and what the Fed has done to induce those recessions and what it's done to Fed funds. I think they could get it down to 2% in a couple of years, but that's going to be painful.
Yeah, it is going to be painful. Kenny, you were trading the cues with Garrett during the Fed meeting live in front of everyone. That was such an exciting session, seeing the knee-jerk reaction going up and then just seeing that wild flush. What was going on there? What was the VWAP helpful in trading that?
You want to know what was helpful? Don't mess with Shah. That's what happened yesterday. Shah said this market was going down after that Fed. I imagine him standing above the market with his sword, just shaking his head. Look at you, silly people, with your wannabe rally. I'm going to stomp on your skull. And man, it took about 20 minutes, but Shah had his revenge. I was thinking about you, buddy. Crushing this market into the close, no bid, screaming for the exits with a gap down today. Yeah, we're in trouble. We are in trouble, and UVXY gave us that little hint. But listen, I see we have something else to talk about, but there was so much activity going into the close, and it was scary. It was really scary. It was one of those moments where there was zero bid on the market. Nobody wanted to own anything. And if you just sat there and just, do what Shah's doing. He's crushing this market, crushed these stocks. There's zero bid, and a lot of these stocks are going to zero. And I don't know, man, it's hard to have hope right now. But listen, when all hope is lost, and that'll be probably when the Santa Claus rally never shows up, and this market's down and nobody wants it, and Cathie Wood is packing her bags and they're liquidating her fund as a failed momentum hedge fund trader, that's when we'll start buying. When they liquidate Cathie Wood and she's sent packing, that'll be true capitulation. I think that's exactly what's going to happen.
No. Kenny, I love it. Shah, yes, Shah's the hero right now because I love Shah's revenge. And it's so funny how no, but honestly, isn't it funny how all those perma bulls just had their 5 minutes of fame last week? Shah's like, I will crush thee. But honestly, are we headed in what Shah?
I don't know what investors and traders were thinking when they were listening to what he was saying. That just blew my mind. It's like, we're not all listening to the same thing?
Yep.
I don't think they wanted to hear it. Shah, it's
I was trying to hear it. But Kenny kept screaming over Pal's talk.
I was making sure everybody knew what was going on. I was doing interpretive dance while I was trading as well.
I was loving it. Oh, we have a new Ziggy is saying we need a new service called Shah's Revenge. Actually,
Shah's
kind of
Revenge.
like that. Shah's Revenge.
I like it.
All right. But fellas, honestly, I'm seeing we broke some very key areas of support in this market. Are we in for more chop today? Is there any chance we could have some sort of rally at this point?
You're talking to me. I'm going to look for individual achievement awards. Qualcomm is interesting down here. I'm actually looking at Roku. Any little buying, you're going to get a mini squeeze. I don't think we're going to rally, but man, if we do, it'd be fantastic. UVXY being above 10, that's a little heads up for you. But listen, these stocks sentiment is all that is making this market move right now. The sentiment, we're starting to get real, again, we're all going to be crying like Kramer soon. You thought that was a bottom. Wait till, again, I'm telling you, Cathie Wood capitulation it's going to be epic. But right now, I can't see this market catching a bid. But if it does, VWAP's going to tell us.